SCHD is, no doubt, one of the most reliable dividend ETFs out there. It's got a reputation for stocking up the most reliable and high dividend yield payers. To achieve this, it constantly rebalances its portfolio. Now, you might have thought it's normal. It happens every year. Why should we care about minor changes? But here's the twist. This year is different. SCHD didn't just shuffle things around, they went all in on the energy sector. So you don't fall behind, we've sneaked out 5 energy stocks SCHD is loving, including one with yield up to 3.97% for you. Today we're breaking down the top 5 energy stocks SCHD is loading the truck with. These are the secret weapons they're using to keep those sweet dividend checks flowing for the long run. We'll count them down from the smallest position to the biggest bet. Ready to see how the pros lock in fat dividends and sleep like a baby while the market goes crazy? Let's go dividend hunting. Here's the deal. SCHD just shook things up in a big way with its 2025 portfolio rebalance. And it's not your usual minor tweak. Financials, once a major player at 17.2%, got slashed nearly in half, dropping to just 8.5%. And where did that weight go? Straight into energy, which surged to 21% of the portfolio, the biggest sector shift SCHD has ever made. Why? Because energy companies are pumping out cash like crazy, rewarding shareholders with fat dividends and steady buybacks. SCHD isn't chasing hype. It's chasing reliable, juicy returns, and right now, that means energy. So if SCHD is going all in, Alpha's going all in too, and we're about to show you the 5 energy dividend beasts leading the charge. MUR. Kicking off our energy list at number 5, we've got Murphy Oil, known by its ticker MUR. Now, this isn't some household name like Exxon or Chevron, but don't let that fool you. Murphy Oil is a sneaky little cash machine that SCHD clearly couldn't resist. MUR is an independent oil and natural gas company. Translation: they drill stuff, they pump stuff, and then they sell that stuff for a lot of money when oil prices are strong. They've got operations in the US, Canada, and even offshore in the Gulf of Mexico. So yeah, they're not just sitting on one oil field hoping for the best. But let's be real. This kind of business doesn't exactly come without risk. Oil prices move like alpha after 3 cups of coffee. Up, down, sideways, back up again. When energy prices are booming, MUR is printing cash. When prices drop, well, things can get bumpy. That's the nature of the beast in the oil game. Still, SCHD doesn't mind getting a little dirty for the right reward. And here's why. Murphy Oil is throwing off a dividend yield of 3.97%. That's the highest yield on our list today, and you better believe SCHD noticed. Here's the thing. Even with that juicy yield, SCHD's keeping its stake in Murphy Oil small at just 0.15%. Why? Because SCHD plays it smart. They'll take the dividends, but they're not going all in on a company tied to volatile oil prices. It's a smart move. Let Murphy do the work, while SCHD cashes the checks. Now let's move on to the next one. OVV. Sliding into the number 4 spot on SCHD's energy power list, meet Ovintiv, OVV for short. Now, this one might sound like a biotech company, but nope. Ovintiv is all about good old-fashioned oil and gas. Ovintiv is what we call a shale specialist. They operate across some of North America's hottest energy basins, including the Permian, Anadarko, Montney, and Bakken. Translation: they know where the oil is hiding, and they're really good at pulling it out of the ground. This is a company built for efficiency. They focus on high-return drilling and managing costs like a coupon-clipping grandma. And in the wild world of energy, that's what separates the survivors from the bankrupt headlines. But let's not sugarcoat it. The risk is always there. Ovintiv is tied to commodity prices, just like everyone else in the oil patch. If crude oil decides to take a nap, OVV's stock price could catch a cold. That's just how the energy roller coaster works. Still, SCHD clearly sees potential here. They've carved out a 0.43% spot in the portfolio for Ovintiv. It's not a massive position, but it's enough to show they're paying attention. Now let's talk dividends. Because you know SCHD isn't here for vibes. Ovintiv is serving up a 2.96% dividend yield. It's not the fattest yield on this list, but it's stable, well-supported, and backed by a company generating serious cash flow from efficient operations. And hey, if SCHD is sliding even 0.43% of its portfolio into Ovintiv, it's a signal they're testing the waters. Now, the next energy stocks on this list? They're bigger, badder, and built to pump out dividends like an oil rig on overtime. HAL. Sliding into our number 3 spot is Halliburton, known by its ticker HAL. It's the behind-the-scenes heavyweight of the oil world. See, while most energy companies are busy hunting for oil, Halliburton is the one selling them the pickaxes, the ropes, and probably the energy drinks to keep them going. Halliburton is one of the biggest oil field services companies on the planet. They don't own the oil, but they get paid to help everyone else find it, drill it, and pump it faster. It's like being the mechanic in a world full of race cars. There's always business when the track is busy. Of course, there's a catch. When energy companies tighten their belts, like if oil prices crash or drilling slows down, service companies like HAL can feel the pain pretty quickly. Their business relies on producers staying aggressive. But clearly SCHD isn't worried. In fact, they like what they see. Halliburton holds a respectable 0.86% weight in the SCHD portfolio, and it's easy to see why. HAL is dropping a steady 2.50% dividend yield right now. It's not the flashiest yield on the list, but it's solid, reliable, and backed by a company that knows how to profit from every stage of the oil game. Alpha loves an energy stock that gets paid whether or not they strike oil, and Halliburton's cash flow machine is well-oiled and ready for more. SLB. Formerly known as Schlumberger, SLB isn't here to play small. This is the largest oil field services company in the world. We mean, if there's a drilling rig anywhere, from Texas to Timbuktu, odds are SLB had something to do with it. They provide the brains and the tech behind energy exploration, everything from seismic data to drilling services to fancy digital tools that help oil companies squeeze every last drop out of the ground. It's the ultimate picks and shovels play for the energy sector. But here's the trade-off. Like Halliburton, SLB doesn't control oil prices. When energy producers slow down, SLB's phone stops ringing as much. It's a high-reward business, but very much tied to the energy cycle. Clearly, SCHD thinks this energy cycle is still in full swing, as they've given SLB a monster 2.30% weight. This makes it their second largest energy holding. And with a 2.87% dividend yield, SLB is paying investors just to sit back and wait for oil companies to keep drilling. Bottom line, SLB is like the tech-savvy engineer of the oil world, and SCHD wants them on speed dial. When energy booms, SLB cashes in big. Now, if SLB is sitting pretty at number 2 with a fat 2.87% yield, then you know the final boss of this energy list is going to be something special. Ready to meet the king of cash flow? Let's finish strong with COP. The heavyweight champ of SCHD's energy portfolio, ConocoPhillips, is one of the largest independent oil and gas producers in the world. We're talking massive operations stretching from Alaska to the Middle East. Their whole business is simple: find oil, pump oil, sell oil, and then send a nice fat dividend check to Alpha while they're at it. Of course, the risk here is what you'd expect. They live and die by oil prices. If crude crashes, profits take a hit. But when oil stays strong, COP turns into a cash-printing beast. And SCHD clearly wants a piece of the action. They've pumped a solid 4.6% of their entire portfolio into ConocoPhillips. Yeah, no other name in the sector comes close. In fact, COP isn't just their biggest energy bet, it's the number 1 holding overall. That says a lot about how confident SCHD is in both energy and COP. The dividend? A juicy 3.15% yield. This is higher than most energy giants, with a history of special dividends and buybacks when times are good. Considering SCHD bet this big on an energy stock, they're telling us one thing: this is where the real money flows. Remember, SCHD's 2025 rebalance isn't just a portfolio update. It's a masterclass in chasing reliable cash flow. Energy is the new king, and these top stocks are the crown jewels fueling SCHD's dividend machine. So we want to hear from you. Drop a comment below and let us know which ETFs you're holding in your portfolio. Got a favorite? Let's talk about it. We'll dive into your suggestions. In the meantime, check out these other great investment ideas. We've got something for everyone.